Consolidated EBITDA 324 million against 515 million in 9 months 11. Now this is primarily due to PTA earning, drop in PTA earning. Net operating debt to equity remains at 1.1. Polypet acquisition was completed on 9th August. Nigerian Greenfield started on 19 July 2012. So this will add our, basically, the African footprint. And demand of PET and fibers continues to grow year on year at historical levels. North American and European market continues to be more consolidated. So our profitability in North American and European market is much better and disciplined as compared to Asia. This gives you quarter by quarter volumes. You can see the fourth quarter was the worst in 2011 when we had 1.4 million ton revenue, billion dollars, volume of 1,054,000. First quarter was 1.187. Quarter two was 1.346 million tons. And you can see that the volume has been growing to 1.414 million tons in Q3 with a turnover of 1.7 billion. So actually the demand is resilient. What we are facing today is the high capacity, this means depressed margin in PTA and some of the Asian PET business. So what we can conclude that our products are close to the consumer staple goods. So demand is not an issue, but it's basically the supply which has increased because of the substantial increase in the capacity in PTA and Asia business. And demand is resilient. If you look at the volume trend, 9 months 11, Asia contributed 49% of the volume. West contributed 51%. Fourth quarter was 47% Asia, 53% West, and 9 months 12 is 43% Asia and 57%. But the earnings are not in line with the volume because of the weakness in Asian margin. We gained the market share by acquisitions and organic growth around the world. As you know that we acquired the Old World assets in 1st April, the MEG assets in North America. But if you look at the earning, next slide, the 9 months 11, it contributed 47%. If you see, so 49% of the production contributed 47% of the earning. But look at 9 months 12, the Asia only contributed 19% of the earning and 81% was contributed by the West. So there is a significant drop in the Asia earnings. So what we are facing in Asia today is a huge overcapacity built in China, particularly in PTA business. As you're aware, the largest market of PTA was in China. China was importing about 6.5 million ton of PTA. Now it has dropped to 3.5 million ton because there is a huge overcapacity in China. Similarly, in PET, Asia, we saw a huge buildup of the capacity. So the Asian situation is not good right now, and this should be a temporary because as we believe, as far as PET is concerned, as the extra growth comes up, the earnings should come back. And I will show you further the return on capital employed in the next slide. Now look at the earning trend and how Asia is weak. In 2011, Asia is 42% of the capacity, 31% is North America, Europe and Middle East is 27% out of the 5.9 million ton in 2011. If you look at the right-hand side, average core return on capital employed for 3 years, 9, 10, and 11, which were certainly very good years for IVL because of very high PTA margins in Asia. Asia, ROCE was 13%, North America was 14%, and Europe was 22%. Europe was extraordinary in 2011, particularly in PET business because there were a lot of force majeures by PTA producers like BP, and the imports were uncompetitive because of the high Asian PTA margin. So Europe delivered extraordinary results in 2011 in PET business at 22% ROCE. Now if you look at fourth quarter of 2011, which was one of the weakest quarter for us, the 1% was the Asia, 10% was North America, and Europe was 12%, a blended of 6%. But 9 months YTD, look at ROCE for Asian assets, 0. Now why 0? Because of the PTA. The large PTA, I'm sure you must be following the PTA business of another of our competitor in Siam Cement Group. And it is the same issue around the world because it's much, much below the cash cost and it has become unsustainable level. There is a lot of rationalization going in PTA business. Koreans have shut down few lines. Taiwanese are shutting down few lines because it is not competitive. So when the industry is over capacity, what exactly happens is that the high-cost plants shut down and the margins return back to a sustainable level. I'm not saying that margins should go to 2011 level, no way, because 2011 was one of the highest margins because of cotton shortage. So 9 months, if you see, our West business has been very steady. North America has delivered 15% and Europe has delivered 15% ROCE. So why this big difference? US is a very disciplined market. 3 producers control 90% of the market. Not much impact of Asian imports, high logistic costs, duties are there. In Europe, although the European weakness is there, most of the plants are in North Europe. We may see some impact in Europe because of the imports from Asia, because there's lower freights and all that, and we are seeing some pressure. But the 2 areas have delivered very good ROCE. So its all problem is Asia. If you look at volume and earning, the EBITDA per ton, this goes quarter by quarter, the volumes growth. As you can see, the volumes has been consistently high. Fourth quarter, these are annualized volumes, so 4.2 million tons in fourth quarter. First quarter became 4.7, 5.3 with the acquisition of Old World, and third quarter is 5.6. So company is able to get the business. The volumes are there. But problem is the weakness in the margin because of the overcapacity in PTA and marginally in PET in Asia. So if you look at EBITDA per ton, in Q1 and Q2, 2011 was the highest, 165 and 158. Now this was because of cotton shortage. There was a lot of PTA shortage in Asia. The margins were very strong, resulted in high PET margins in Europe, and there was a force majeure. So that was an exceptional above the long-term average of 126. Since then, we have seen the weakness. We believe that this is a short-term weakness. As you can see, this is core EBITDA, $71, $112, and $78. This is after the inventory gain losses we give you, so that cannot be very precise. But you can see that there was a rebound in second quarter, some weakness in quarter 3. So right now, we believe that this is a short-term weakness because it's unsustainable for people to keep losing money in Asia. And so we feel that there should be some correction. If you go to the next slide, what is IVL focus? IVL focus is specialty. We want to be a player of commodity and specialty. You might have seen several products outside. Our acquisition of Fiber Vision, Trivera, or even the SK in Indonesia is towards some specialty resins. If you can see, 11% is presently the specialty, and what we are targeting on long term is to make 15%. So when you look at all the different assets around the world, our strategy is that we use the little bit high cost assets for specialty, which has more flexibility, and larger assets for the commodity, so that you can remain cost competitiveness. So specialty will continue to increase, which will effectively increase EBITDA per ton and the earning potential of the company. Look at the financial results. For this quarter, our production was 1.4 million tons versus 1.346 million tons last quarter, which is 5% growth and 17% growth versus the same quarter last year. The revenue was 1.7 billion, roughly 1.741 billion, drop of 3%. Now, primarily this is because of the drop in the prices, is absolute prices drop. The EBITDA per ton, reported EBITDA is $122 million, and $105 million versus 153 the third quarter last year, which is a drop of 21% versus third quarter. As I said, the 2011 was one of the very good years when the PTA margins were very good. EBITDA per ton became $86 versus 78 last quarter and 127 third quarter 2011. Core EBITDA after adjusting inventory gain and losses in third quarter was 110 versus 151, and third quarter was 136. We had significant losses in second quarter. Third quarter we gained back part of it. Fourth quarter we will gain back some more as the markets are stronger at present as far as the inventory gains are concerned. So core EBITDA per ton, which we calculate, is 78 versus 112. The operating net profit is $46 million versus $39 million, a gain of 18%, and the annualized EPS is 1.2 baht versus 1.12 baht last quarter, and of 19%.